2022 was filled with drama, specifically around inflation. So we had three major themes of 2022 that are now starting to resolve themselves. The stock market, however, hasn't resolved itself, and I'm going to explain why. Welcome back to the Bitcoin Layer. I'm Nick Bhatia. Today's episode is called Stock Market Unresolved. So what are the three main narratives that were with us in 2022 that have started to resolve itself? Number one, and most importantly, inflation. Inflation, at least by the CPI metric, peaked above 9% in the middle of 2022. It's now falling rapidly and should be down in the 5% area within the next few months. So it doesn't mean that inflation is going away or that inflation is gone. What we can see from the recent data is that inflation has fallen rapidly, and this fall in inflation is also leading to resolving the next theme of 2022, which was Fed aggressive tightening. So that means the Fed raised rates over 4% in under 9 months. That period of rapid rate increases as a response to very hot inflation is also resolving itself. So we see the Fed back from 75 to 50 basis points at their last meeting. February 1st is widely expected to be now only a 25 basis point hike, so that a consecutive decline in the pace of hikes. And then we do expect that that hiking cycle is coming to an end and that February could be the Fed's last rate hike. So inflation from 2022 resolving itself, not fully gone, but the worst of the worst has resolved itself. Fed hikes have also started to resolve themselves as we see an end to the hiking cycle. Now, the third theme from 2022 that has also started to resolve itself is higher rates itself in the treasury market. So we see treasuries now are in month 3 of a bull market as treasury yields have fallen from around 4.25% to below 3.5% in the 10-year part of the curve. They've also fallen from almost 5% to now almost 4% in the 2-year part of the curve. So the expectation of higher rates has left the market for the most part in treasury. And also we can see that treasury auctions are very, very strongly bid right now. I usually don't like to take too much information from the auction because the treasury market is so liquid, people can source the paper after the auction. But it is notable that indirect bidding has come back in a very strong way, which means that foreign buyers are submitting bids through parties that can participate in the Fed auction. And that's usually indicative of high indirect participation in treasury auctions. We can see that come back in a big way here in the late months of 2022 and the early weeks of 2023. So what is the drama now left in financial markets? Now that we have the three major themes resolve themselves, what about risk markets? Well, risk markets had a terrible 2022. We can see Bitcoin up almost 50% off of the lows, but we can see the stock market in this wedge, and really this is where all the drama is in financial markets. So let's get into it. Okay, here you have the weekly chart of the S&P 500. This is looking back over a year at what has happened in stocks. So we can see that the peak in stocks was right at the turn of the year from 2021 to 2022. And since then, we've seen 4 consecutive lower highs. So look at the chart here and you see these lower highs connecting in a trend line and showing that behaviorally buying is running out of steam at a price that is not even at the previous peak. So it is just a sign of general weakness in the market, and it's a downtrend. So we can also see that since October, stocks have been trying to form a little bit of an uptrend as we had a spill in December that did not reach new lows, but it was actually a higher low versus the October area. So we do see some signs of buying coming back into the market, but that buying is still met with selling on the other side. And therefore, we still have this downtrend line really ruling over the stock market. And it does bring the drama to the stock market because Bitcoin is back above its November levels from FTX. The treasury market is rallied very strongly as rates keep falling to new lows, but stocks are in this wedge. So declining resistance here and an increasing support. And this is a look at the weekly. Now let's look at a chart of the daily, zooming in a little bit more to what we're seeing in the market. And I want to point your attention to this candle on December 13th. So on December 13th, the market tried to break out of this downtrend channel and failed spectacularly. And that's this huge wick that you see go up and fall back down below. And then we see that the stock market traded lower in 4 consecutive days after that. And that's really called a failure to break out here on the chart. What does that December 13th candle and subsequent sell-off tell us? It tells us that at that point in time, the stock market wasn't ready to get back into bull mode. Bulls were not convicted enough to sustain the buying above this trend line, and stocks fell back down. Now, it is also right around this 4,000 area, which is a nice round number. Markets usually like these nice round numbers to consolidate around. And right now, 4,000 on the S&P 500, as well as this downtrend channel, these are the two areas of magnetic pull. This is where all the behavioral buying and selling is surrounding right now. Now, look a little bit toward the end of the chart here. This is the last couple weeks. We see again the stock market try to break out above this trend line, fail, try again. And right now we are on another day of testing back down to see whether stocks want to stay in this wedge or actually want to break free. So you guys know I usually don't do much chart analysis on daily charts. I'm usually spending time on the weekly chart trying to dissect the overall trends. Sometimes I get into the dailies. Now I'm going to get into 4-hour candles just to demonstrate the price action and the behavior, zooming way in and looking at what is happening around these trend lines. Now, you guys know that we're not a trading service and we don't actually actively trade these markets. We're looking at it from an analysis perspective. But we do bring in the 4-hour chart here because it shows us this battle around the wedge and the battle around 4,000. So now on the 4-hour candles, you can see back during December 13th, that huge spike above and failure. Now we see over the last couple weeks, another battle around this area. And look at what is happening even today. It broke out a couple days ago. It came back down and tested this line, and it's trying to bounce here again. So it does remind us that this is where the drama is. It's in the stock market right now. It is what we are watching most closely at the Bitcoin layer to give us the macro overview, to give us a sense of what's happening across asset classes, because asset classes play off of each other. Last year, higher rates drove stocks lower. This year, will lower rates drive stocks higher? The answer is maybe. Our bias has been yes, just based off of what we are seeing from the Fed, but we are waiting for this chart. We are waiting for the S&P 500 to give us that confirmation that the big trade of 2022 now has to be unwound, and those that were short stocks have to cover their position and get back long. It also has major implications for Bitcoin as we see the correlation between Bitcoin and the stock market remain very strong, both on an intraday level and on a more intermediate basis. So can Bitcoin break to a new bull market without the support and following of the stock market? We're not so sure. And that's one of the reasons why we are really watching the stock market right now and how it's going to perform. Make sure to go check out our Substack publication. You can find us at thebitcoinlayer.com/subscribe. Make sure to subscribe there, subscribe to this channel, and thank you for sticking with us this week at the Bitcoin Layer.